everyone. Today's the 28th of January, Wednesday. This is Brad Matheny. This is your morning video. We're looking at the markets again, trying to push higher up into new all time highs. We're going to take a look at a couple of markets here to show you what's going on. And there's definitely a driving push right now for the markets to try to push higher on this very low volume. So it's kind of interesting how the markets tend to want to, at least the SPY tries to want to push up into this new high area, this new high territory. And it could be that, we could see an extended move potentially up into this newer high area, kind of maybe up into this area into the end of January. Now, I still believe that the government shutdown is likely. I still believe that the predictive modeling downward trend is valid. I still believe that that move for the predictive modeling trend to the downside is going to start. If I were to draw a box and tell you, it says that it's going to start really at the end of the month, beginning of February. But in reality, we have about let's call it a 2 week window where, at this point right here, right around early February, this is where we're likely going to see, try to make this a dark color. This is where we're likely going to see the topping really start to set up. So we have to wait another 3, 4, 5 days through the end of this week and into early next week before we may see some breakdown. And even then, out to the 20th, we could see it roll a bit into kind of a breakdown mode. And a breakdown mode, typically, if you look at tops, tops tend to kind of do this. So, give you an example. Tops tend to kind of move in this manner: up, break down, sideways, maybe do a new high and then break down, or peaking, move down, false move, and then a breakdown. So, kind of looking at this type of a scenario here where we've had the recent high and we're going to maybe reach up here to new highs and then roll down. That's kind of my thinking as to what's coming um, over the next couple of weeks. You can see we've had this area here. And, if we go back and take a look at some tops or some bigger peaks, you can see here, we've had this peak here, come down, reach a new high, and then double down here to this double low. Or if we come back to this area here, you can see we hit this high, came down, reached up to a new high, stalled, reached up to another new high, and then moved down right before the tariffs. Again, these types of tops are fairly common. You see, we come up here, pull back, reach to a new high, and then move into a broader downtrend. And what you really want to look for is this, fairly weak volume in these uptrends. When we get into an uptrend, and try to give you an example here of, weakening volume. So here's a rally that takes place in the market on fairly weak volume. Okay, and we start to get these rollover periods, and then we get these pushes downward. Now, this is not a substantial downward move, but normally near a topping pattern, you'll start to get weaker volume uptrends. So you start to see here, we move up, we peak, come back, hit a new high, and then roll into a downtrend. In the meantime, look at the strength in the volume here. The bearish volume is very strong compared to the moderate bullish volume here. It's almost as if the markets are already positioning into kind of a downward move. So come back over here. Here's another top. Now, this is a little bit of a tough example, but you can still see it. We come up here, we peak, we roll, we get this big gap up, and then we move down into this peaking topping pattern. But notice this rally. Notice how weak that volume is through this rally. It just keeps weakening as it pushes up. So there's a pretty good indication, again, that, if you take a look at where we're at right now and you really pay attention to, this weakening upward volume trend, to me, that's an indication that, we're really looking right here at downward volume trending, kind of like this area right here. We got a rally into a downward trend, and we're looking at a pretty solid pullback. Or in this area, We're rallying up into this area. We get this weaker trend, and then boom, we get this pretty solid pullback. So I think that this next pullback here could be fairly substantial. But again, it's probably going to be, February 4th, 5th, 6th, 7th before we start to see a breakdown. Now, the SPY cycle patterns, let me come back over here and try to show you here where we're at. We're at a breaking up or down move. We are in an upward trend already on the SPY. SPY is up 0.26%. As I mentioned to you, I'm not chasing this. I legged into some more shorts yesterday. I'm going to sit right now. The only trade I'm thinking about taking, I'll tell you about it when we get there, is in metals again. I think metals are in a historic rally. And after watching the move in gold overnight, I'm going to let it settle today, see what happens, but I may throw a longer term or a set of longer term calls out, maybe 35, maybe 45 days out, just as a hedge against the potential that metals do not pause as long as I suspect them to pause. But right now, like I said, we're moving into that kind of that secondary topping formation. And I've talked to you guys about this before. Basically, it is uh, a mode where we've set up this high, we come back down, we rally to a new high here, rally to a new high here, rally to a new high here, and rally to a new high here. Potentially, well, as of this point right now, we will be okay. Where based on where we open right now, we'll likely get a new higher close. If this is the highest close we get, then we didn't get the higher close. I'm looking at this as a broad apex, potentially reaching this higher washout low and moving into the downside. Now, remember, we need confirmation. We don't have confirmation the downside is going to happen yet, other than the predictive modeling systems. So we are essentially, I'm preparing for a move that I believe is valid and accurate. And I've taken a couple of smaller legs into these trades, and I'm willing to sit and wait right now. I got to wait for the market to come to me instead of trying to chase it and trying to kick it to go down. Let's just wait it out. We've got about 3 or 4 more days to see if we're correct. And I know it's hard to do, but I am positioned for the breakdown. I think the breakdown is accurate and valid. In fact, I think I had an example back here that I shared with you guys yesterday. These were the 30 minutes. Where did I have that? 30 minute. Oh, that was the wick. Let me do this real quick. Okay, I'm back. I just got the TT scanner server loaded, and we're going to come over here and take a look at the SPY, QQQ, and we're going to take a look at the daily chart. So you can see here the daily predictive modeling is suggesting that price should stay rather muted, move into sideways trending. This is early February. You can see we move into very muted trending, running into real resistance somewhere up in the 690 or 688 to, let's call it 690 area. So theoretically, price, the predictive modeling system is saying that we should be running into some resistance right up in this area, more than likely. So we're already above that area. We're going to open a little higher. Predictive modeling suggests that price is going to stay sideways in through an uptrend right now, moderate uptrend, and then move into real sideways trending in early February. We get this big breakdown out here around the 18th, 19th. We'll see if that shows up. Now, remember, this is daily. So we come into weekly. And again, you can see the weekly data has now changed. We're looking at moderate upward trending perpetually. This has altered from the last time I looked at it. So this could mean that we could be looking at a continued upward trend here. Let's take a look at some others to see what's coming real quick. But again, this may change my dynamics by middle of next week. If this trend continues, I am not going to be leveraging the short side as heavily, and I may be changing my direction, obviously. The predictive modeling can alter and change. We need to see how this predicts at the end of at the end of this current week. So now let's take a look at the QQQ. And again, we'll start off here with weekly. The weekly still shows QQQ breaking downward, starting really into this week here, February 16th. Let me clear this. I don't want to clear everything. Hold on. Oops. So we will. We'll keep that. Get rid of the yellow and get rid of this blue. Get rid of this blue and this blue. Okay. So now clear all these out for you. You can see where we're at. We're at the upper range. We're getting ready to break down. Very clearly showing a breakdown mode in the QQQ. SPY is not right now. So again, the way I try to interpret this is I try to interpret it as, general trending. So we're looking at a pretty solid breakdown potentially over the next 7-10 days. And the daily chart, as it's still loading data, it'll slow down a little bit. So let's just do this. No. Here comes the daily. And again, this apex volatility plays into an important role. We could see kind of a washout high setup. So let's see how it plays out. Let it load. Here we have the daily QQQ rolling into an uptrend. You can see here we're already fairly extended. Looks like we're going to be running into resistance somewhere up here in the 631, 633 area. So again, daily shows we could see a moderate melt up. Weekly shows again we could see a melt up out here until the February 9th, 10th area and then break down. So we still have a moderate uptrend ready to go. Okay, and that's something that I have to be aware of, and you should as well. Generally, we're not breaking downward. Okay, at least not over the next 4 or 5 days. Okay, there's the updater. Now let's take a look at the IWM. And again, this thing is loading, so be aware that it's got a lot of data loading in the background. Wait for this to load. Now, IWM is kind of like I like to consider it somewhat of a leader in what the market is actually doing. But, it's up to you. It's really up to you what you want to do. I like to consider it kind of like um, I don't want to call it the lost cousin, but kind of like the lost cousin of the major indexes in the sense that, the major indexes can be doing one thing, but the lost cousin over here is the one that, because it's not biased so heavily with blue chips and other larger companies, this one gives us a pretty good breadth of the health of the market. You can see here we're looking at a moderate breakdown. I do think this is a directional trend to the downside. Remember, this is daily. Let's come back over here and look at weekly. I do like using weekly personally. And we'll see what the weekly looks like. Again, we're getting a moderate breakdown. You can see the blue line moving into that breakdown period around February 16th. So that's, again, could get a move a little early, could be right around this maybe government shutdown. Now, government shutdowns don't guarantee the markets are going to crash, just so you know. They will present some turmoil, but they don't guarantee the markets are going to crash. So now we'll come over here and we'll look at RSP, which is the equal weight. And you can see this is weekly. getting sideways movement, a little bit of a breakdown over here around the 16th. And again, daily, and you can see on RSP pretty much sideways. So we should theoretically on the equal weight kind of be staying in this range until potentially breaking down maybe out over here. We shall see. In fact, I looks like I kind of drew a line here showing you what was going to happen, but it looks like we're going to stay trapped, which means I think the S&P is going to stay trapped as well as we move forward. Oops. And then lastly, we'll come over to DDM, which is the Dow Jones Index. You can see the Dow Jones here daily. We've already had this peak. We're not reaching new highs. And you can see the Dow Jones is indicating kind of a broad megaphone type pattern coming down across this area and moving across this area. So in reality, guys, like I said, I'm under the impression that we're going to get a breakdown over the next 5, 10, 15 days in the markets based on what I think is this rolling type of trend. Yeah, the SPY is higher and it seems to be pushing higher, but at the same point in time, we have that underlying weakness in the market. We have that flagging formation. I think that we're going to be looking at a moderate breakdown over by probably middle end of next week, start to move back downward. So the predictive modeling system, as you're aware, does change every bar. So we're going to be looking at this and adapting it. I am reasonably positioned for the breakdown. I do not want to overdo any of my trading, getting overly married to this breakdown trade. I do have until the 20th out here to be able to see a breakdown take place and try to turn it into money. Right now, like I told you, I'm pretty much, 75, 80% cash, and I'm waiting for the next big setup. So that's where we're at right now. I would urge you again to potentially prepare for some type of a breaking move. And again, I would urge you, given this data, with our breaking move, our rally move, our carryover, and again, counter trend rally could be a breakdown, gap up lower, could be a move down, a top pattern, likely setting up a top, a flat down pattern, likely setting up a moderate meltdown, and then a momentum rally could be a bounce up. And then here we have the gap up lower and counter trend should be a gap down higher. We just moved back into bullish trending here. I think this is kind of a false top. So we'll see here, but it looks to me like we could be looking at a false top over here, rolling back down. I'm going to give it some time. I'm not going to chase it to the upside, but I'm going to give it through this week and possibly into next week to see what actually goes on, and then go from there. So, with the next setup, we're going to take a look here at gold and silver. Now, gold had a big move overnight. Silver actually did as well, popped up to 114 again, 115 almost. Yeah, got to 115. This is an unprecedented move, and it stems from the fact that, really the demand for gold and silver physical across the world right now is hyperinflated. I mean, this is almost Beanie Baby crazy, but I think it's going to continue, and I think we're very early in this. I told you I sold out of nearly all of my positions yesterday. I think I have. Well, let me look real quick. I think I had 2 or 3 positions still on for gold and silver. I have a SILJ, an SLV, and one UGL position. Other than that, I have no other positions in place. I am looking for a continued rally here. Eventually, I want leg 3 to show up, just like I suggested back over here. So let me come back over here and We're going to get leg three showing up eventually. So we're pretty much right here. You've seen this chart before. We've just completed leg two. Okay, we should be moving into a period of pause over here. And I use this as the example because this is the mode I believe that gold and silver are in. Now, what's happened, what's changed from 2006 till now is that we've got an explosive metals demand. Okay, and now we had a moderate metals demand back over here. Silver shot up, gold shot up. This was a point in time where, when you think about it, we had pretty moderate demand for metals given this rally. But this one that we're seeing right up here, the current one, is probably 3x or 4x what was happening in 2006, which means that this pause phase right over here could become very shortened, may only last out here till, hypothetically middle of February. So if I were to say, a guess at what I think is likely to be the base and bottom, given what I'm seeing, I would say maybe this area, which is only 5 or 6 or 7 days out, and a pullback maybe to 4,800, 4,600. But at the same point in time, I wouldn't mind placing a couple of trades as a hedge. I would have to do that by moving, buying long positions or calls in metals. And I would have to do that by picking something that's at least 40, 50 days out, giving myself enough duration in the trade to be able to withstand any sideways movement and to catch the beginning move up into leg three. So again, I think that we're looking at probably, middle end of February is going to be, if we've not already hit a bottom by then, we're going to be moving into a very solid bottom by say the 15th, 12th to 15th of January, maybe 15th to 20th. Sorry, not January, February. So I don't think we have a whole lot of time here to wait for this pullback. I think the demand cycle is going to be very aggressive. And I think instead of waiting a month and a half like we saw in 2006 for these lows, it might only be 2 or 3 weeks of a bit of a pullback. So I am prepared to take my risk slightly with a small number of shares or contracts as long as I have long enough duration to be able to catch the move up. That means I'd have to be buying out into, March or maybe April. And I'm going to pay a premium for that, but I'm going to be able to ride out this move, and it's going to be a hedge trade just in case this pullback is very short lived, doesn't really show up, or in case there's some kind of a dynamic twist in moderate demand because gold and silver could continue to rally based on this unprecedented demand. So again, right now, gold is setting up in a blank pattern today and trending. We are in bullish. Tomorrow we have a crush pattern. Crush patterns can be very big, up or down. So again, positioning now in a small mode to hedge and waiting for tomorrow and Friday, which is a flat down on Friday. I think we could be positioning very well. In fact, maybe I'll just wait until tomorrow and Friday to let this crush and flat down pattern play out. So again, it's kind of one of those things where do you want to have the trade playable or be sitting in cash waiting for a pullback that may or may not show up? The only reason I'm thinking about jumping into this now is that we tend to continue. I mean, this is a big move. Gold is already up $193 overnight. That's a big move. Okay. I don't necessarily want to be sitting here missing it. I'd rather have one or two contracts playing that give me the opportunity to ride this if it blows up even further. So this is a matter of, it's not a fear of missing out, although it is. It's the idea that you can't win if you don't play. Okay. So having a moderate amount of risk, being able to extend my duration out 40 plus days, and being able to potentially ride this move seems reasonable to me. Okay, we'll come back over here to the Bitcoin. Bitcoin is rallying again. As I mentioned to you, I think we're going to continue to see an upward trend. pushing higher. We are looking at a bottom pattern in counter trend mode, should be a top. A topping pattern here should move us potentially up into these highs. So I'm going to guess that the 91,000, maybe 91,500 area. Take a look here. So yeah, somewhere maybe right up in this area or a little higher for our top. Could be a fairly explosive day today, especially if Bitcoin rallies off of this low. We're looking at nominal volume down here. We're not seeing big buying volume take place. If we were to see buying volume get above this level, then yeah, I think you're going to see a continued rally. We need to see volume increase here. We are still in that flagging formation, so this is not my normal chart, but here we have the excess phase peak pattern setting up here, coming back down, flagging, moving down into breakdown. This is the consolidation phase. Here's our flag low. Here's our flag high. That's our consolidation high, consolidation low. There's our flag low. Up here's our flag high. So this is our consolidation phase. Ultimately, we're either going to base and bottom and move into an uptrend here, or we are going to move into a breakdown phase over here. So we have yet to determine what the directional outcome is. What we do know is that we're in the consolidation phase, we're basing and bottoming. And as I mentioned to you, this is an inverted excess phase peak pattern. I've shown it to you before. I'll do it real quickly for you. Invert the chart, come over here to a drawing tool and show you that we have this rally moving down into a flag, moving down into another flag. So this is our flag low. This is our secondary flag low. And what we have here is this is our inverted mode. We would at this point be expecting a confirmation to the downside in this manner. And if we were to fail, we would see a move in this manner, which would be lower. So ideally, guys, we are looking at the real confirmation here with this double flagging formation to be potentially this direction. We'll see if it plays out or if it fails and moves back down. This means that in theory, we are looking at more of a rally phase this way, given current confirmation. And if we uninvert the scale, I had that backwards. We are looking at, yeah, that is correct. Rally. So that should be correct. Invert. This didn't change. So this has got to come around like that. We're looking at this mode being the more dominant mode right now for Bitcoin. So there's a chance we're going to move into some sort of a moderate upward trend in Bitcoin. All right, so now natural gas, big breakdown on contract rollover. This is likely going to send UNG down into these lower ranges again. We come over here, take a look at UNG. It's at 1425. It's not breaking down very hard. As I mentioned to you, there's a chance we could come down here and fill this gap. So I would be cautious right now if you're trying to buy into UNG. It may be a good buy, but we could try to move down and fill any of these gaps. So in theory, waiting to this area or maybe this area would be a better buy than chasing it right now. I still believe that the storm is going to hit. I still believe that this contract rollover is just natural. Volume will pick up in the new March contract, which is where we're trading right here. This was the February contract. I do believe, as Michael, Sana Trader, mentioned, that we're going to see a continued rally up here with this storm hitting. And remember, the storm, as I keep showing you, is really not going to go away. It's not going to go away. Okay. It's not going to go away hardly at all. We're just waiting for that second phase to come in. That's 1 o'clock. So you can see these early morning. This is the second phase coming in, and it's going to be just a matter of time, I think, until we, get into a second phase. We're not done with winter. Now, daily supply. Let's see if they've updated this. Nope, not yet. We're going to see how this supply and demand side kicks in. But again, I really think that we're looking at a very solid move in natural gas here to the upside. It's just going to be a matter of waiting out this accumulation phase. So, again, what's happening in UNG, moderate pullback, nothing serious. I wouldn't try to be a buyer in this mode theoretically, given where we're at. I wouldn't try to be a buyer until we start to see accumulation in natural gas and a new rally in natural gas. But in theory, I would be looking more like this area as a buy zone if I had my druthers. Okay, that's it, guys. I'm going to get the video updated. Sorry about these long videos, but trying to give you as much information as I can. Remember, this is, I think, the setup of a pullback in the markets. So we're going to see how it plays out. I've been right and I've been wrong. So let's see if it plays out. It's all we can do. In the meantime, like I said, if you really want to, just move to cash. I know the fear of missing out is a tough thing to deal with, but the reality is, you know, we need to sometimes move into this mode of protecting cash because that is part of being a trader. Okay, you need to understand that, you know, I don't want to say the wrong way, but going all out all the time leads to all out failures. And you need to understand that sometimes you got to pull back, put your allocation level at 10 or 15% instead of 40, 50%, and just ride out the trends in smaller positions. Okay, guys, that's it.